Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video, for the 27th of December here in 2022. And just a few more days to go until the new year. So it is a holiday week, and the markets were split today, with the technology sector right there in the Nasdaq being the weakest, and it was down 1.5%. It stayed weak all morning, and one major reason, two of them actually, was right here in the XLY. I know the XLY is not necessarily the Nasdaq, but we'll pull up our Market Watch tab, pull in the S&P 500, and this is the market itself. The sectors were split today too. The strongest was again another gain in energy, and the bond market, will come to all this in the video, but was down 2%. But back to the sectors. In terms of what happened today, it was a technology rout. Again, despite some of the strength in energy, consumer staples, industrials, and other stocks across the board, even financials had a flat trading session today. But it was Nvidia, Amazon, and you can barely see it, but right there is Tesla, but not to be outdone. Apple, Microsoft, and Google, and Netflix, and a few others. That's going to balance out the S&P. But in the Nasdaq, it's all red, because it is the technology name. Keep in mind, in the S&P 500, the tech sector is mainly confined to the top of the chart. Again, consumer services is technology, and Amazon and Tesla are actually retail. They fall under the XLY. But in the Nasdaq, they all go together to make up the technology index. And we see the boxes bigger because of market cap. There is Nvidia. There is Tesla. And we'll shift the view to see that the weakest stocks in the sectors were Tesla, Nvidia, Netflix, Amazon. They're here, 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 and here. So keeping that in mind, Google was also a part of it, which is here. Of course, Microsoft, all the tech sectors and the main monsters of tech were down, but they have a much stronger, even Meta, stronger impact on the Nasdaq. So it was down 1.5%. That's going to push it off to new 52-week lows, not far from where we are. XLY has already made and is continuing pushing 52-week lows. That's bearish for the broader market. And in the Analyze tab, you can always check and see which stocks are comprising the sectors. Amazon, Tesla, roughly 25%, with Home Depot, of the XLY. We think of it as consumer discretionary, or I'd like to call it retail. On the back of that is XLK. XLK is technology, and it's mainly Apple, Microsoft, Nvidia, and others. See that Visa and MasterCard, which we would think to be as financial names, actually fit in the XLK. So a little bit of nuance when you're looking at these and putting trades in your account. It's not as simple as it might seem. But the XLK technology sector is bear flagging its way to new lows on the back of stocks such as, again, looking at these, Nvidia, bear flag itself, Google. A bear flag is just a short sell opportunity in the context of an ongoing downtrend. And I like to describe these as the big arrow. The big arrow points down, or another way is the top left of the chart, and the market has traded down to the bottom right of the chart. That's a downtrend. And there's Google, there's Apple, which also is off at new lows. Now, Apple is the largest market cap stock in the S&P and in the market in general, and having it at new lows, not a good sign for the broader economy. And again, the projection as we update it is that the market will make new lows before, or not in December, but into the new year. So we see the Nasdaq is not far away from that target, and that is our official, my at least official play. And the S&P getting to those new lows under 36 and 35 on the S&P futures, with the SPX that will be right there. There's the potential play off to new lows, getting us into the next year. The Russell is our small cap index, and the Dow has been holding its own inside a lengthy trading range, if we can see it that way, between about 32,000 and 34. So watching it in spades as long as the Nasdaq is going out and making those new lows. Speaking of making new lows and things that are correlated, put that big arrow back on the chart. And that's in large part because of inflation and higher interest rates. Rates would be the treasury yields. And that's one major reason why the Nasdaq and the tech stocks continue to get lower prices. The bond market, TLT, and seen through the tradable ETF, we can look at the ZN and the ZB, which is the bond market. That big arrow also points to the downside for the same reason. Inflation's still here. Even though the numbers are coming down, they still are much, much, much higher than the Fed's 2% annualized rate of inflation. And they are raising rates to combat that. Seeing that the rates, T and X, we keep pointing to these, remain in an uptrend, and this time the big arrow points up. And the big arrow to me refers to fundamentals, the backdrop about where the market's going, and of course a trend on a larger frame than, say, a daily or anything on the intraday chart, such as your hourly chart. And that may be framing some trades. But the big picture and the big arrow is up. Inflation is up. Yields are up. Treasury rates are up. And we're pushing right back to that 4%. That's what 40 stands for, is 4% on the 10-year Treasury note. You can also look at TYX to see that it's going to be in that same ballpark. And TYX is the 30-year Treasury index. That's going to correspond with ZB. But I like trading and watching the TLT, which is itself conducting or trading a bear flag potentially off to new lows. Keep that in mind with the Nasdaq, which is doing something similar, and leading stocks such as Amazon, Google, Tesla, which continues to fall to the downside on very, very high sell volume. And we saw Nvidia, but also other stocks such as Netflix. Disney, not a tech sector name, not a tech sector stock, but nonetheless is weak, getting weaker. And other stocks such as General Motors, bear flag continuing there to new lows, and Ford. Tesla being a car manufacturing company which has its own bear flags, but is extending much, much, much lower. And to see where we are with Tesla shares, again, we had the split a couple of years back. But from the 400 split adjusted down to 100 is roughly a 70% decline. And in fact, if we look at Tesla shares from year-to-date basis, not alone in their decline. Again, the tech sector itself is where the selling pressure is. But just to get comparisons as we like to do at the end of the year, let's look at our year-to-date performance and put that in a percentage. To do that, go with the chart scale. Now let's go with the percentages. And we're going to show price as a percentage. And Tesla shares from the opening are down 72%. And again, where is the XLK? Much, much, much weak, but not as weak as some of the individual stocks or individual components. Nvidia being down about 53%, Amazon being down 51%, Google 39%, Disney shares 45%, and then we'll take a look at Apple on the year, on the basis that is, 30%. But some of the other stocks, we'll look at Meta, which is down 65%, and off its lows from earlier in the year. A quick note of the bond market. Bonds themselves, TLT, are down 30%. ZN down about 12%. That's your futures contract. ZB down about 19%. 2022 is going to go down in the history books as one of the worst years where not much was safe. Not much being the stock market, equity market, technology sectors in general, technology stocks in general, and the bond market, which is often a harbinger of safety or a place that we rotate capital in defensive times. That didn't help either. The only thing that was up in a major way for this year was the energy sector, and that's mainly an inflationary play and also a little bit of geopolitics, being Russia and Ukraine. Nonetheless, XLE is the strongest, will end the year close as it is, above 50% in the 2022 year. That being said, as we go through the remainder of these days in 2022, quick note, which stocks on the scan are strong, getting stronger. These stocks I like to show at the end of the videos, only to note those stocks that are gaining or getting strong, which are expected to get stronger. And that sets up potential bull flag trades, which is a good thing to do to balance out any negative delta or hedge delta or short positions in your broader portfolio, which is the play on the big picture. Merck is a strong stock getting stronger, MRK, and keeping it back to the percentages, up about 51% for the year. Caterpillar is getting a breakout of a range. Not necessarily the most bullish stock at all, but nonetheless is showing up on the scan of a stock making new highs. But PCG, it's up there as well, making new highs. And again, bull flags are the trades. And then Arch Capital, Conagra Brands, 19%. Campbell's Soup, one of the most boring stocks. We like to joke that it's a boring stock. Boring, but profitable. So even in recessions, we still have to eat cans of soup. We still have to drink beverages. And we have to clean our house, clean our places with cleaning products, and that would be consumer staples. In general, they've remained flat for the year. Generally speaking, XLV has done something similar, which has remained flat, whereas materials down 10%, industrials down 6%, discretionary and the others are where the selling pressure has been. Financials down about 14%, and the utility sector also there with the staples flat on the year. But there are a couple of stocks making new 52-week lows, and we know some of them. Apple, which crested down to its 52-week low, and Tesla, which continues to be a weak stock getting weaker. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 27, 2022.